Have you ever noticed how oil prices can go up even when the world is pumping out more oil? That's exactly what's happening right now. Despite a major boost in production from OPEC and its allies, global oil prices are rising. US crude just hit its highest level in weeks, and investors seem more focused on rising risks than rising supply. So, what's really going on? In this video, we'll break down why are oil prices rising when OPEC is actually increasing supply. To understand today's oil price moves, it's important to know OPEC's role in global oil production and supply. OPEC, the Organization of the Petroleum Exporting Countries, was established in 1960 to empower major oil-producing nations with greater control over their resources and the ability to influence global oil prices. Later, OPEC formed a broader alliance with countries like Russia, Kazakhstan, and others. That group is called OPEC+. Together, these countries control over 40% of the world's oil supply. Generally, when OPEC+ wants to push prices higher, they reduce oil production. Conversely, to ease pressure on the market and lower prices, they increase output. That's the idea, but it doesn't always go as planned. In fact, OPEC has tried aggressive tactics in the past to shake up the market, and it didn't always work. Take the 2014 to 2016 oil price war. Saudi Arabia, OPEC's biggest player, decided to flood the market with oil. The goal was to crush US shale producers, who were growing fast and cutting into OPEC's market share. At first, it worked. The number of drilling rigs in the United States declined and investment in domestic oil slowed down. But US shale producers quickly adapted by cutting costs, advancing drilling technology, and streamlining operations. Soon they were making a profit even at much lower prices. Meanwhile, Saudi Arabia and other OPEC countries lost hundreds of billions in revenue. By the end of the conflict, it became clear that the strategy had backfired. In 2020, they repeated the strategy, right as the COVID-19 pandemic struck the world. The outcome was another crash in the oil market. This time, the US government stepped in. Then President Trump threatened to pull military support from Saudi Arabia unless they backed off. The pressure worked and the oil price war quickly ended. In 2025, OPEC+ is raising oil supply again. They've increased production by over 400,000 barrels per day for the third month in a row. But why are they doing this? Some member countries, like Iraq and Kazakhstan, have been producing more than their agreed quotas, and the group wants to reassert control by formally raising quotas. Also, countries like Saudi Arabia want to regain market share from US shale producers, who are once again expanding. But here's the twist. Instead of falling, oil prices are rising. Why is that happening? A big reason for the price jump is rising global tension. Ukraine has launched drone strikes on Russian airfields. In return, Russia attacked targets in Kiev. This has raised fears that oil infrastructure could soon become a target, especially Russian refineries or pipelines. Even the possibility of disrupted supply can send prices higher. Second, there's also talk of new sanctions. The US may push other countries to stop buying Russian oil. A bipartisan group of US senators is working on penalties for countries like China and India that continue to trade with Russia. If those sanctions go through, it could take a big chunk of oil off the global market. Third, Iran is pushing back against a new US proposal aimed at easing oil sanctions. Iran produces over 3 million barrels of oil per day. If sanctions stay in place, or get worse, it limits future supply growth from that region. Fourth, wildfires in Canada recently took over 350,000 barrels a day offline. There are also worries about oil production in Libya, a country often affected by unrest. In short, the world is on edge, and oil markets are sensitive to any supply shock. Even though OPEC+ is boosting output, the increase was smaller than some traders expected. What's OPEC's real game plan? Rather than triggering another price war, they're opting for gradual supply increases, carefully steering the market while maintaining a competitive edge. Saudi Arabia, for example, needs Brent crude prices close to $90 a barrel to balance its national budget. Even though it can produce oil for just a few dollars per barrel, it relies on high prices to fund its massive spending plans. Meanwhile, in the US, lower oil prices help fight inflation, but if prices fall too far, US shale producers start losing money. Where does that leave the global oil market? Even though more oil is hitting the market, prices are still rising. That's because markets aren't just about numbers, they're about nerves. Fear of conflict, sanctions, and sudden disruptions often has a bigger impact than the actual supply increase. And when major players like OPEC, Russia, Iran, and the US are all making strategic moves, the price of oil reflects that uncertainty. The bottom line is more barrels don't always mean lower prices. And in today's world, oil is still as much about politics as it is about economics. Thanks for watching. If you found this video useful, be sure to like, comment, and subscribe for more videos on business, global economics, and markets.